I was going to ask is, too big to fail only gets bigger during a crisis. Why is that? All of you have answered that question, so I really appreciate that. We've heard a lot about the $250,000 limit. My hope is that if this banking committee decides to act, that whatever number we come to, we will at least index that number so that the number will keep up with reality. Third, we've heard a lot about the payroll accounts, which of course is very important for us to figure that aspect out. But I also would like to hear from you all talk about just the basic limit. What should the limit be? And as you discuss that, and hopefully take a couple of minutes of my time on the question, what's the downside? What are the risks? What are the costs? And how do you balance that with the benefits? I'll start with you, Mr. Kelly. Take 20, 30 seconds.
Chairman, thank you for the comment. Great to hear your thoughts on the indexing. That fits with one of our recommendations. The concern about the new limit and what it should be, as I testified earlier, we don't know what that number should be. We think it should be empirically based. We had on my task force individuals from GSIBs all the way down to small banks and had fierce debate on how to approach this. And what I can tell you is unanimously we believe that there is more data that we need to look at. Go back to the spirit of the FDIC, which was to promote public confidence and stability. At one point in time, that number was as high as the 80 and 90% based on our conversation with Vice or Interim Chairman Hill. Today, only 57.7% of deposits are covered today that are insured, 57.7%. That's actually in your staff's memo, and I want to thank them for the great job they've done there. Thank you, Mr. Chairman.
Anyone have a different perspective on that question?
Chairman, I'd like to have a few comments, if you don't mind. Thank you for the question. Like Kenneth, I also firmly support indexing, whatever is agreed upon. I think that makes sense over time. You know, we surveyed our members. We had about 40% coverage at $250,000. That moved up pretty dramatically to 90% at the $5 million level. And then when you get to 20 million, you really cover about 98% of the operating accounts. And that made sense to us because, you know, that's covering the vast majority. At the same time, you're not having customers try to figure out who they should bank with. And that really is, I think, a big difference. People just don't know how to do that analysis. So thank you.
Thank you. My next question is, which banks should be covered by an increased limit of FDIC insurance? Is it all banks, some banks, small banks, threshold 10 billion, 50 billion, regional banks? Nicholas?
Sure. Thank you, Chairman Scott. I would say that the potential danger of putting a threshold in statute is that they get outdated quickly. You look at, Dodd-Frank had a $50 billion threshold for, systemic risk. That was increased by Congress in 2018 to 250. That is now 7 years removed. And so is that number the right number today based on, thresholds? That said, do you ultimately want a situation where you have deposits moving from smaller institutions to large institutions, right? That is something to consider as far as where the threshold lies. Again, I would also support my colleagues on the panel here of saying that indexing is absolutely paramount because, once you put something in statute, it tends to be fixed, right? And then without an index, you're going to have, an outdated threshold that is, 5, 6, 7, 10 years down the road that is no longer valid. So I would caution on, making sure that there's a proper index of any threshold.
With my remaining 45 seconds or so, Mr. Kelly, how do we make sure that we don't disadvantage smaller institutions under $1 billion? Credit unions also bear that burden, as well as a cost structure that actually works versus one that sounds good but runs more institutions out of business. With 32
Chairman
seconds.
Scott, real quickly, I think what you've said is important, that we shouldn't pick winners and losers in the banking space. I see the banking space as a system. I'm an engineer by training, and I look at things from a broad perspective. And there is merit to the largest banks that we have in our system, which makes us the strongest in the world. But we also need the capillaries in small towns like the one I grew up in Eufaula, Alabama. And so I would suggest as we think about this, we apply a process that certainly creates consistency so that the customer is agnostic to which bank they decide to use.
Thank you.